Well, let's get some business news now. It's Friday. Joining me now is Peter Switzer, the founder of the Switzer Report. Good morning to you, Pete. We need some positivity today. It's been an interesting week. We've had the RBA board meeting. We've had all sorts of figures and whatnot thrown about. So what's your view of things? Where are we at the moment?
Yeah, I think the two big stories of the week have to be the economic growth numbers. I think also the trade numbers were big as well. But what's happening overnight, the Dow Jones up over 370 points or so. And we're the closest we look like to seeing a trade deal happen. So the positivity around the possibility of a trade deal is probably at the best we've seen all year. And we've seen the gold price fall as a consequence. The bond market is heading in the opposite direction. So all that talk about an inverted yield curve, well, there's less inversion at the moment. So, and what's interesting to me, Pete, is that the editor of the Global Times, that's in Beijing, is one of the people's of China's leading newspapers, that the editor-in-chief is regarded as like the deep throat when it comes to understanding what the Chinese want to do in the trade negotiations. And he's saying this is looking very good.
All right, what about negative interest rates, the potential for that, Pete? Should we be worried?
Yeah. Well, look, the big surprise story was Alan Greenspan, the former US central bank boss, saying that it's only a matter of time before America sees negative interest rates. Now Alan's a pretty bright guy, but it's a big call. But I think it rests on the fact that he believes a trade deal won't happen. Donald Trump will take this to the brink. China will then fold their arms up and sit on the sideline hoping for a Democrat president to win the US election. If all that happened, I think Greenspan would be right. My belief is that a trade deal will happen, and a lot of the bad stuff that could create negative interest rates, like a much slower world economy, would start turning around, and as a consequence, we wouldn't see it. But I think it's fair enough to say, if there's no trade deal, Wall Street could really overreact in the negative side. A recession could happen before the US election, and then negative interest rates would be a real chance.
So those trade deal hopes, Pete, I mean, does that suggest that investors think that is believable?
Yeah. Well, the fact that we haven't seen a big sell-off has always told me that the market consensus is that there will be a trade deal. If it wasn't, if they really believed that a trade deal was a very low chance, our stock market would be down probably 1,000 points, and the Yanks would probably be down even more because their indices, or people, the Dow Jones is up near 25, 26,000. So there'd be much bigger sell-off. So at this point in time, the consensus is we will see a trade deal. Things will improve. We'll avoid a global recession. We'll avoid a US recession. Therefore, we'll avoid a recession. All those are, I think, hinge heavily on the trade deal. And also the fact that the Fed might cut interest rates, it also rests on the trade deal, because if a trade deal happens, Jerome Powell won't need to cut interest rates because confidence will come back, business investment will kick up, and so on and so forth.
All right, Peter Switzer, always good to get your thoughts. Thanks for joining us. Hope you have a great weekend.